the show begin. Next generation for the win. We're going all in. All together now, let's begin. Let the show begin.
I love that Marvin. What a character.
Yeah.
Quintessential entrepreneur. My goodness.
I think that's one of the beauties of web and travel. In our industry, is there's quite a few characters. Wouldn't you agree?
Absolutely. It's made up of characters.
So Chris, for those of you who don't know you, you've been an entrepreneur and an investor for over 30 years. And you founded 6 companies.
7. But
7? Okay, 7. Sorry, I lost count.
After
6, 7.
after 5, no one cares.
And you're currently the co-founder and managing partner at Thayer Ventures. You've invested in quite a few travel companies. Some of those we're all very familiar with, including Hyperloop, Sonder, Hipmunk, Adara. And of course, with I guess we have to say Cornell and Harvard as well. So just a range of experiences. But if you could just, to kind of kick it off, of all those 7 companies, I found, having set up a few companies myself, there's not a correlation between the funnest and the most successful. So tell us about the funnest company that you founded.
Well, so I launched a company right in the heart of the dot-com boom. So October 1999, it was what we called back then an exchange, an internet exchange company, raised $10 million off of a PowerPoint deck with absolutely nothing but an idea, because capital was free back then and everybody was slinging for the fences. And then subsequently raised another $40 million, built a team up to about 175 people. It was just the go-go time. And it was just really extraordinary to be in that mix. And it was a different type of entrepreneurship then. And as you pointed out, certainly not the most successful, because I then had to take that 175-person team down to about 22 when the bubble popped and suddenly capital, which had been saying, go as fast as you can, hire more. I mean, the board meetings were literally putting up a org chart and showing the boxes that we filled. It wasn't revenue. Revenue wasn't on the table yet. And then having to turn that corner and jam it down was a crazy ride, but it was an intense growth experience for me. And I think one of the things that I was most proud of is that one of the investors in that company, who I lost all of their money, ended up becoming an investor in my fund, 20 years later.
So that's a vote of confidence. If you can lose someone's money, but they still want to talk to you.
You just have to do it with integrity. But we're all, entrepreneurship and creation, I think what we're all about is taking measured risk. And everybody who takes a seat at the table understands that. And it's how failure is interpreted and experienced and treated as a learning experience. If you're with like-minded people and it doesn't work out, there can still be a great deal of integrity and learning in that experience and good relationships that come from it.
So Chris, today we wanted to talk about 3G, 3 generations. So your father was an accomplished entrepreneur and an innovator in the real estate and hotel and gaming business. You yourself, we talked a little about your entrepreneurship. And as an investor and venture capitalist, you're seeing the next crop of entrepreneurs, like the 3rd generation.
Yeah.
And so we'd love to start at 1G, start at your dad's generation. Tell us a little bit about your dad's story, and also as you tell us his story, what key lessons did you pull away from that? Yeah,
I mean it has been a remarkable ride for me because my entire life has been immersed in entrepreneurship. And my dad, he was a hotel developer in the state of Hawaii, which is where I grew up. He was, I think, best known for creating the first major destination experience hotel in the Hyatt Regency Maui. He also did the Hyatt Regency Waikiki when he was in his early 30s. Did a couple of Westin hotels in the islands. And back in the day, back in the 60s, and I would say this probably tracked well into the 80s, entrepreneurs were gamblers. They were all-in players, right? Venture capital hadn't really developed yet. There weren't sources of funding for businesses. So these entrepreneurs would personally guarantee everything. It was the only way to raise money. It was all in with your personal net worth on every swing of the bat. So that generation of entrepreneur was a different kind of character, and a lot of boom-bust stories. And it was, frankly, that tendency to personally guarantee that ultimately ended up being an unfolding for my dad's experience. And then I would say that, in sort of the body of my adult life, entrepreneurship now started to meet capital that had different types of interests. Venture capital doesn't ask for a personal guarantee. It's not debt. But it was still really expensive to build companies back. Even when I launched my company in the late 90s and into the 2000s, it was expensive to build companies. And so entrepreneurs were promoters. They had to tell a story, they had to sell a vision, they had to build teams. And so more of the character of a fundable entrepreneur was somebody who could truly promote. I think that was a core requirement because of the enormous amount of capital it took. I think that has really changed in a super interesting way. Obviously, there's been a lot that has happened in technology over the last 20 years that have made building companies much less expensive. So the entrepreneurs that I see now are truly makers, right? They're building stuff. They have insights into really unique problems that haven't yet been solved. They sometimes will think about, well, why hasn't somebody tried it that way? And then rather than being caught up in sort of leading a big promotional effort, they start to build stuff. And so they're more capital efficient, and when they finally come to the table to raise venture capital, they'll have product, they'll have engaged with customers, they'll maybe even have a little bit of revenue, God willing. But it's a different kind of an entrepreneur.
Got it. So we went from gamblers to promoters
to makers.
To makers.
Yeah.
Is that right?
Yeah.
And I'm curious, in like your DNA, so what percentage are you a gambler, what percentage are you a maker, and what percentage are you a promoter?
I'm 100% promoter.
100%.
100%.
So was that a surprise? So was that a surprise to anyone? No, right?
It's like I consider myself a butterfly catcher, right? I mean, part of the reason look, when you meet somebody who has started 7 companies by the time they're in their 40s, you should run, right? That's the quintessential example of hopelessly ADD, and that's me. I have an insatiable appetite for curious new problems to solve. I'm the butterfly catcher, and so I love to sort of find those threads. I love to evangelize what I think is coming. I like to tell big stories, and I think starting a venture platform, frankly, the hardest startup I've ever had. Right? It's 15 years in. We're investing out of our 4th fund. By far, the hardest startup that I've ever been a part of. But it's constant promoting, evangelizing, and it's a fire hose of just information and super interesting stuff. So tailor-made for me.
And so why is it the hardest startup if this is suited to your incredible strength of being a promoter?
So the business of venture capital is all about assets under management. So when you have more assets under management, the fees that you generate off of those assets under management are essential to then building the business. Unless you're bringing just a bunch of capital of your own to the table and you don't really care, the essence of the business model of getting going is assets under management. Raising the first fund for a venture capital firm is just about the hardest thing in business. Very hard to do, almost impossible to do with any sort of reasonable scale. Our first fund was $11 million. That's not what I would consider assets under management, right? So no one's getting paid. You're investing that money trying to prove a thesis. Maybe that gets you to the table in 2.5 to 3 years to raise another fund. So that's a long winter that you're walking through to get there. And it's a very, very competitive business category. It has been cyclical. It's facing a big challenge right now in terms of the lack of exits and ability to return capital. So it's an enormously difficult franchise to get started. But I guess the only reason I'm still here 15 years later doing it is because I love it so much, right? I love the whole, the variety. I love the entrepreneurs. I mean, for me, my whole life is about disruptors and creative people like Martin and others that are trying to just do remarkable things. I frankly think it's the thing that will ultimately save the planet.
And do you think, obviously people would describe, but besides a promoter, they describe, you're an operator, you've built businesses.
Yeah. Yes.
And there's certain theories about venture capital. Do you have the operators or do you have the financial guys or women, calling the shots? In your view, is Thayer a bunch of operators? Because I know Jeff Jackson is an advisor and some other well-esteemed people in tourism, or do you have some financial people involved as well?
Both. But I would 100% agree that operators are essential. And I think it's because operators have more empathy for what an entrepreneur is going through. I think operators have more sort of realistic experience of how hard it is. So on a spreadsheet, it can look very simple when someone says, oh yeah, we're going to increase our margin by a couple of points over this next year. And it's like, oh yeah, that sounds good to me. It's a lot harder than that. And I think operators have a better instinct for team, and then they can also come in and be that coach and confidant for the entrepreneurs that that ultimately we invest in. And you said something yesterday, I think, about becoming best friends with your entrepreneurs and how essential that is, because it's a collaboration. Venture capital is not about writing a check and then checking in every 90 days and getting a report and then wagging your finger at the entrepreneur as if you know better or something and expressing disappointment. Venture capital truly is about partnering. And working closely and going through, the pain and the glory. Well, frankly, it's taking on the pain and then giving the glory, right? I'm sure you've had that same experience.
Yeah, there's always I guess there's a challenge on who gets the glory, right?
Yeah.
Tell us about, so you talked about the next generation, the makers, quote unquote.
Yeah.
You meet hundreds of entrepreneurs a week or a month for sure, right? What's missing, you think? Is there anything that's missing? Any common threads of mistakes that entrepreneurs are making?
So I think that there's nothing missing per se in the good ones. But I do think that every generation sort of has its characteristic aversion to certain aspects of risk. In the old days, it was shame and failure was shameful, and so a lot of people just didn't take the risk because they were afraid to. Grit is critical, and there's a way that this generation, and I'm talking about Gen Z or really young entrepreneurs, have been raised in a world that's been pretty damn easy, especially the privileged ones, right? And so they don't necessarily have the same grit and the same staying power when it gets hard. And it always gets hard when you're building a business. So I think that's actually a rare trait. So when you meet a young entrepreneur who clearly has that kind of grit, that when the shit hits the fan, they're not going to sort of go, wow, this is hard, I'm going home. Right? They actually work through it and find a way. That's a quality that I think is essential and maybe slightly less common in this younger generation. So if you have that as an entrepreneur, tell the story, because that's a really important thing. The other thing I'd say is that makers are product-driven. They tend to be product-driven, and they sometimes are slow to get to the go-to-market challenges, right? And sort of see down the line and say, okay, if this starts to work, how am I going to take this out? how do the economics line up? And so you also made a point yesterday that I fully agree with, which is early on being focused on talent and org structure and culture, because I'm seeing today that there are many good ideas, companies, entrepreneurs who have built some great products. They've been makers who have gotten some initial traction. You start seeing a little bit of that low-hanging fruit, early adopters and their numbers. But when you say, okay, what's the go-to-market strategy here? How are we going to scale this from a go-to-market perspective? It's almost always an undeveloped answer. And I think that companies like Canary Technologies, which is one of our runaway winners right now, maybe one of the strongest go-to-market entrepreneurs I've ever seen, with a co-founder who is one of the strongest product co-founders I've ever seen. And that formula has led to, well, I think they've raised close to $75 million in venture capital and are cresting $30 million in ARR after a Y Combinator graduation in 2020. So it's those stories are really powerful. But that one was driven by go-to-market.
And did you see that early on when you met the founders, or did that just emerge after you invested? Did you know these guys know how to do go-to-market?
In that case, it was that very early on.
You could see it.
They had a go-to-market motion in mind. They had a theory, or they had a thesis about what it was going to be. They had a dashboard that was not yet populated with data because they hadn't started to really push the engine. But they knew this is a go-to-market business. It was product, and then it was go-to-market. So it wasn't so it was leaning into that problem and showing that sort of commitment to, we're going to iterate and solve and A/B test our way all the way through this until we figure it out, was enormously encouraging and unusual to see. So again, I would say, even if you're a seed stage company, you should have a clear view of what you think your go-to-market playbook is going to be.
And what about grit? That was the other criteria you had talked about. How do you figure that out? Do you spend time with the founders, or what sort of cues are you looking for to see if someone may have that?
The grit?
Yeah, the grit. Yeah.
It's so hard. I mean, and we've made those mistakes so many times. It's tough, right? Because when people are fundraising and they're fundable, it's usually because good stuff's happening, right? Very rarely are we writing term sheets to companies that are struggling. So by definition, you're dealing with an entrepreneur in a good time. So, you can do some background checks and talk to some folks that they've worked with in the past. But you know what? I've done that before and thought that I had, was working with someone who had that grit, and it turned out not to be the case. I've seen other cases where, it just was I wasn't sure what we were going to get, and it turned out to be, an unbelievably strong and committed entrepreneur. So it's hard to suss out. I'd love to ask you the same question, see if there's anything I can take away from that.
I just spend a lot of time with people. You have to spend 20 hours, I think, to really understand somebody, because we get too caught up in people's filters. Yeah. Like they went to a great university or they had a great job experience early in their career, and we have to get through that.
It's that bias that our business tends to be sort of pattern driven, and it is important to break that. And spending the discipline of time, I think it makes sense.
Chris, I kind of made a joke yesterday as well about there's someone in this room that's going to be setting up a unicorn. Yeah. What do you think? You think that's true?
Absolutely, 100%.
You think that there's someone here today?
I'd say probably 5 or 6.
Five or six unicorns. Well, okay, this table.
Yeah, travel, there is something going on, this sort of confluence of factors in travel that I think are fundamental. It's an industry that's growing faster than global GDP and has been for some time, expected to continue to show that kind of pace, historically resistant to the adoption of technology. All of that is fundamentally changing. I think we are witnessing a flipping of the iceberg in the tech stack right now in hospitality that's profound. And I do think that this new intelligence age is going to unlock soon, once we get beyond the productivity tools and the obsession with some of the tinkering around. is going to create opportunities for entrepreneurs to rethink the way things are being done and come forward with inventions that we can't yet imagine. And unlike the past, I think now we're in a place where the incumbents, the supply side of our business, and even the intermediaries are open for business. And you can thank the pandemic for that, right? I mean, the pandemic caught travel supply utterly flat-footed and lacking agility. And there's a real commitment, I think, across the industry to never let that happen again. That's unlocked a pace of experimentation and testing and trial that allows the good ideas to begin to percolate. And then if they can solve the go-to-market, it's a big enough landscape that building $1 billion business is not that big of a stretch.
So Chris, so I don't want to promote you, but just a question. Do you guarantee to any entrepreneur in this room today, you have to be an entrepreneur, they have to have started a business and quit their job, will you spend 30 minutes with them and understand their story?
100%. I mean, it's what I do. For me, that is the fuel that drives my curiosity. I love nothing more than to try to get inside the head of a maker who's solving something.
All right,
so I welcome it.
So raise some hands. I just want to see how many are there. Let's see, there's one over there, 2, 3. Oh, let's
right,
see.
my colleague Kara is right here in the front row. She'll take the first meeting. Just kidding, Kara.
So I guess you have to spend a few days in Singapore, apparently.
Yeah, no. Chris at ThayerVentures.com. Send me an email. Always happy to hear the ideas and give feedback and offer support.
Hey, Chris, thanks for joining this conference. Thanks for joining us on stage. But also, thank you for providing great advice to these entrepreneurs. Thank you very much.
Thanks buddy.
Thanks.
They're ready now. Let the show begin. Next generation for the win. We're going all in. Take center stage now. Let's begin. Let the show begin.